Hello traders, Gary Wagner here. It is Thursday, the 28th day of July, approximately 8:15 in Honolulu, Hawaii, and this is the daily report for gold. We currently have gold trading slightly lower. You can see the current print around 1612, 1613 in that area. Interesting activity. As I talked about yesterday, I said that we might in fact get some fairly wild gyrations in the market. And I believe that's fairly evident when we take a look at this Henkin chart. It is a 240-minute chart, and I want to draw your attention to one particular candle, and that's this candle right in here, where we had an intraday low this morning of 1602. Correct, trader, 1602. So in other words, after coming off a new record high of 1628, you can see the kind of move that we witnessed over $25 in a very, very short period of time. Now, when we convert this to a candlestick chart, I think you can see really the kind of range we were looking at in this short period of time. Trading at a high of 1617, which was just up against the 23% retracement level. It did trade on an intraday low between the 50 and 61% retracement level, 61 being 1600, and my belief is that's a fairly critical benchmark and in fact should hold if the market's going to continue higher. Now, this is a very, very short retracement because we're only looking at it from the initial move of around the 1580 area. We're now looking at a 612-minute candlestick chart. This is in Henkin format, and we have also interlaid the MACD, moving average convergence divergence. And what strikes me about this particular correction is typically when we look at a correction in terms of it building in power and strength, the Henkin candles are very, very good visual indicators of that. Look at these three corrections, and you can see as we go into the correction, we have the, of course, absence of these upper tails, and the body sizes are growing as that trend correction gains strength. You can see that also here and here. This was a point in which we simply consolidated. The consolidation can be best identified with alternating red and green candles, and as you can see here, it's an interesting formation. We get a very, very strong doji candle right at that pivot point right before it goes to red. But if you look at the body sizes of the following candles, they are certainly not indicative of a market that is correcting and is gaining momentum with that correction. Now, the MACD has crossed. It crossed right in here. It is headed lower. But my sentiment is, when we look at the straight Henkin candles, this correction could absolutely be short-lived. Now, traders, of course, are awaiting any kind of a news as we look to see how this debt crisis will end in the U.S. and how it will be resolved, what kind of debt plan will actually come out as a compromise. For that reason, you have a market that is consolidating but is treading on very, very careful ground. Lastly, I want to take a look at our daily chart. This is with our extensions, our Fibonacci extensions, and it's my belief, as I said the other day, that as long as we maintain within this particular harmonic band, meaning 1609 to 1614, roughly in that area, my sentiment is we are forming a base before heading higher. Now, when we look at these candles, we do have to take note of the fact that on the Henkin candles, on our daily basis, we are getting that doji and it is going to red. We have a stop in place, and we will simply wait to see how this market develops today as well as tomorrow. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Friday for the weekly wrap-up. Bye-bye.
look out my